All right, let me know if you can hear me in the chat. Not much to talk about. Let me know how you guys did today, and let me know if the ES pre-market guide benefited your futures trading. We're gonna talk about tomorrow because tomorrow we do have an interesting timing catalyst. And we're going to talk about the Saturday blueprint as well because we mapped out today's session all the way back on Saturday. Before we jump into the pre-market ES guide and what happened today, it's really of no surprise that price action printed a 18-point range, guys. Are we surprised? Let me know in the chat if you guys are surprised. So let me just double check here. The 9:30 a.m. low is right there. Measuring stick, high to low. 18-point range, right? 18 points. Whenever I look at social media and I see people over trading, I see people frustrated, I see people confused on why today is so choppy, I immediately know the level in which their development stage is. Because it does take some time to understand the significance of external context, right? And really, the best way to learn the significance of external context is just getting chopped to pieces or absolutely run over when a train is coming in full force during a timing catalyst, right? So external context is a massive part of our analysis. It's at least 50% of our analysis. So I like to think of it as 50% external context, 50% internal context, and that's what creates the pre-market ES guide. So without further ado, let's go ahead and talk about it. Let's bring up the blueprint firstly though. Let me drag it over here. So in Saturday's blueprint, drop in the chat if you guys read the Saturday blueprint. This is extremely important every weekend for us to read because it puts us in proper perspective for what's to come. And the worst case scenario for traders is that on Monday, they aren't prepped and they have to spend a lot of their day on Monday preparing for the week to come when you had obviously the weekend to do that. Let's go ahead and read this a little bit here. So external context, we'll read the external context. Firstly, next week we have the FOMC event on Wednesday, September 17th. As we know, the market loves to digest before any significant economic report. I am expecting at the least an extremely slow and choppy Monday, the Monday blues. That's what I like to call it. Before price can potentially wake up movement as early as Tuesday in the pre-market. So right off the bat, the very first line, the very first thing that I wrote is that on Monday, be prepared for the Monday blues, right? Very high chance we're getting the Monday blues. Considering the fact that last week was a true trend week above the previous all-time high macro resistance structures, I find it to be an easy to read to expect continued digestion at the balanced highs, bullish timeframe alignment from last Friday. This creates range trading parameters, but of course we will remain focused on the market structures to showcase who's trapped and who's in control on which time frame, right? So we were expecting the Monday blues, but we were expecting continued digestion at the balance high bracket bullish time frame alignment. And would you look at that? That's exactly what happened today. We got continued bullish time frame alignment because we got a breakout above the all-time high, which is just last week's high, 66, 62.75. And by the way, we'll be talking about the December contract for today. And this breakout above last week's high, it confirmed bullish time frame alignment. Bullish time frame alignment actually stays in place so long as we're above the breakout structure from last Thursday that created bullish time frame alignment right here. So continued digestion at the range high. We made a new high that showcases zero volatility, and it showcases that essentially we're looking to digest via bullish time frame alignment. In the pre-market live stream today, we talked about regardless of bullish time frame alignment or not, the external context takes precedent. The external context comes first. So the Monday blues today took full effect. Regardless if bullish time frame alignment is in play or not, we only got an 18-point trading range. 18 points for the entire RTH session, right? So that's really the significance behind the external context. External context is so, so, so important. And if we go into the notes, I have all of the levels updated for tomorrow, by the way. These are all of the December contract. I believe you have to add about 56 points to every single one of your levels for the rollover. Just quickly look at the notes. So last week was a true trend week higher with all-time high breakout expansion. So far, the trend is not concluded as price continues to digest within the range high. FOMC on Wednesday, expecting an extremely choppy day today, although the structures are clear as the previous day's low needs to break down. So we're expecting range trading, although we will have to see where price wants to create such range. And then due to last week's trend, the higher we go, last Friday's low is quite close to all-time high. So this is the September contract. This is 65.83, last Friday's low versus 66.06. And what happened today is that bulls will remain dominant above last Friday's low and above last week's all-time high breakout structure. Above all-time high is continued bullish time frame alignment. That's exactly what happened. So if you're trading today and you see that bullish time frame alignment is in play, I don't think it's a really bad idea to play the pullback into the prior week's high. I feel like this is just a classic trade idea, right? You have to be aggressive, however, because in a situation like this, you will be playing the 0.382, right? 0.382 and 50% retracements are decent, or they're actually great in bullish time frame alignment environments on the intraday charts, such that the 0.382 made sense pulling back into the previous week's high. This is a decent trade idea, and you will be playing a false breakdown of this 1:15 p.m. low. That's pretty much all for today. I don't see anything else other than that. From an intraday perspective, the 9:30 a.m. low is here, so it's just extremely, extremely choppy. Days like today, I used to get chopped to absolute smithereens on days like today. So the market forced me to literally be better, right? I told myself that I didn't want to get chopped up anymore. It had too much of an impact on my mental, and I had too much of an impact on the days to come, because usually I take one or two losses on a day like today and I'd be like, what the hell am I doing in an 18-point range? So the market basically told me you have two options. You can align with what's happening, or you can continue to get chopped up. It's that simple, because you can't tell the market what it wants to do. It's going to follow along with its own parameters, its own structures, its own context. We have no judgment over the candlesticks. We simply have to follow along with its price action. That's why we call it price action. So the external context for today was broken down in absolute detail in Saturday's homework report, the blueprint report. We talked about the FOMC events on the 17th. We talked about the Monday blues. We talked about bullish time frame alignments. That's what happened today. So if for today you're somebody that doesn't like to trade around all-time high, we're at the absolute highs, right, guys? We're at the absolute highest that we can go on the chart, such that if it's in your rules to not play around all-time high, then there's really nothing to do today. And shorting bullish time frame alignment is one of the worst decisions that any trader can do, because that just showcases that you're absolutely ignoring the chart unless you're looking for a lotto put play. And obviously we know how lottos like to operate. For later today, I will be sending out the adjusted levels. My 4-hour time frame, I believe it will get adjusted by itself at 6 p.m. today with the futures market reopening. TradingView, since this is the continuous chart and my chart is back adjusted down here, adjust for contract changes, B-ADJ, back adjusted, such that when the market reopens at 6 p.m., all of these levels should be adjusted to the new contract. This is the continuous chart. And then for the day trading chart, I'm going to stick with the ESZ 2025 December 2025 contract, and this will be the final rollover until 2026, guys. 2025 is almost at a close, and whenever we're coming into the last quarter of the month, it's really, really important to do reflection. Look at your journaling, look at what you did this year, look at the improvements, and start to write letters for the years to come, right? Start to write some letters on your goals for 2026, 2027, 2028, etc., right? Because the market is going to be here no matter what. So how can we continue to improve and adapt and refine? That's going to create an endless cycle of consistency in just simply being a better trader. And that's always going to be the goal, right? It doesn't matter what your profession is in life. You just have to be better one step at a time. So to reiterate, that's pretty much all for today. We expected bulls to remain in absolute control. We expected bullish time frame alignment to remain in play. The only way for bullish time frame alignment to conclude is if we break down the breakout structures from last week, Thursday and Friday. Last Friday's low is step number one. We have today's RTH low now, but today's RTH low doesn't really mean much. We're still looking at the breakout structures specifically from last Thursday and Friday to conclude the trend. Other than that, not shorting bullish time frame alignment, and we're simply waiting for the next macro time frame pullback. The higher that we go, the more I'm going to get interested at, for example, last Wednesday's low. But 64.89 will continue to be, and this is going to get back adjusted at the 6 p.m. open, will continue to be my first level of interest, my first high quality low of interest, last Tuesday's low specifically. Tesla ended up not filling the gap. I think that's quite important. Tesla, what did pull back today? This is just simple profit taking. Tesla did not fill the gap, however. So let's see if Tesla does fill the gap around 396 anytime this week. Other than that, though, this play is pretty much concluded. I created a conclusion video for all the stock VIP members. I created a conclusion video. If you're an investor, swing trader, somebody that just traded this short term, doesn't matter. We got everything that we were looking for. We got breakout above 350 and we got a 3-day balance breakout, just absolutely nuts. I was not expecting to be at 420, 410 3 days after breaking out of 350. That's just really nuts. But obviously there's external context in play, right? External context is not just on the S&P 500 and the NASDAQ. External context also applies to these tickers. And Elon Musk, the big Tesla guy, ended up buying, I think, $1 billion of shares or something. And that absolutely just ripped the chart higher. So external context, significance. As you guys know, I put my money in with the big boys, or at least I try to. UNH, we got in with Warren Buffett. He started to buy. And Tesla, we got in with Elon, which is absolutely amazing. Incredible stuff. Other than that, if you have any questions, comments, concerns, you can let me know. I think for put selling, it's going to be a really tricky week because of FOMC on Wednesday. But today and tomorrow, absolutely phenomenal days to sell some puts. Absolutely phenomenal. Take advantage of the chop, right? Take advantage of the chop. If you're somebody that just wants to sell options, you're collecting everybody's premium that's expecting a pullback before the catalyst on Wednesday. Use the external context to your advantage if you're selling puts. I think the external context is number one for your technical analysis if you're selling puts, because I am expecting a pullback this week. I am not expecting the chart to go up forever, right? It can go up for as long as it wants to, but I'm not expecting it to go up forever. Eventually, there will be a pullback. And I think the FOMC catalyst event on Wednesday is the perfect excuse for the market to pull back a little bit. We'll see how far it wants to pull back, how deep it wants to pull back. We have to stay on our toes. We have to be ready, because if FOMC is to flush on Wednesday, all of these support structures are going to get absolutely run over. There's going to be no regard for a lot of these supports until the market is exhausted into a significant area of support, and that's likely on the macro time frame. One thing I was talking about with my mentor today is that we've had rallies like this since April all the time, right? Rallies nonstop for consecutive days. So I think this is the 6th or 7th day that we've just gone green nonstop. And eventually there will be pullback. We're not going to be green for 20, 30 days. That's just not going to happen. However, it's important to remember the internal context now of buyers versus sellers. The macro time frame structures of support have been unable to break down since the crash in April. So the macro time frame has been healthy literally since April 21st. Every single one of these pullbacks, as you can see with these red daily candlesticks, all of these pullbacks on the chart could not break down macro structures. I think that's something that's very important to understand, because when there will be another correction, when there will be another crash, well, just think about it logically, buyers have to get run over on the larger time frame. That's where the structures on the 4-hour chart take place. The line in the sand is step number one, and then we have a bunch of supports to break down. I would say the prior 4-week and prior 5-week low, the August 20th low, and the September low, the September 2nd low, by the way, that we bought. These lows need to break down if the market is going to change the internal context of the higher time frame. This is only a 3.7% dip. That doesn't change the fact that the 4-hour time frame is bullish. But if we are to break down that low, let's say we go down here, minus 5%, minus 6%, then we got to start adapting to a changing market environment, which is extremely important because traders that cannot adapt to changing environments are not traders, period. Anyways, guys, let's go ahead and jump into the book. We are on page 160. Almost finished. If you have any questions, comments, concerns, or you just want to talk about the book while I'm reading, you can 100% feel free to cut me off. All right. Yeah, literally almost done. Let's see what the last page is. Less than 100 pages to go. Perfect. It should be finished fairly soon. Page 160. This is Best Loser Wins. Let's go ahead and jump into it. Thinking right. As you read this anecdote, you might think it could never happen to you. Perhaps you are right. I'm not going to suggest otherwise, but I would like to ask you a simple question. Imagine you have two investments, investment A and investment B. Each investment had equal starting value of 100 grand. Investment A is doing well, it is up 50%. Investment B, on the other hand, is not performing, it is down 50%. You are now in a situation where you need 50,000. What do you do? Number one, close a third investment, A, to raise 50,000. Two, close investment B to raise 50,000. Right. Let me just quickly turn on my lamp. All right. So let's reread that. Close a third of investment A to raise 50 grand, or two, close investment B to raise 50 grand. When I asked this question to a group of investors at a conference in Copenhagen recently, the overwhelming majority opted for option one. They would close enough of investment A to raise the 50 grand. Why do you think that is? Why do you think people close the investment that is doing well? My theory is it all boils down to doing to how people react to taking a loss. Are they able to take a loss and move on? Or are they so averse to taking a loss because as long as the position is open, there is hope it will come good again? So I think that's the general consensus for every single person in the world, right? They are open to holding the position that's losing because there's always that chance that it can turn green. Right? And I think the main idea for today is internal and external context. You really need to be able to understand those two ideas. So when you're coming to a conclusion of one, close a third of investment A to raise 50 grand, or two, close investment B to raise 50 grand, I think if you understand the contextual value of both of those ideas, it's quite easy to make a decision. But that takes a lot of experience, in my opinion. A lot of experience to understand. Probably a lot of pain too. Of course, it is impossible to say exactly how you would react in this situation, but I don't have to rely on fictitious examples to get an answer. If you recall the chapter where I spoke about the 43 million trades executed by 25,000 traders, you will remember that those traders lost more on their losing trades than they won on their winning trades. Emotionally, a loss is clearly felt much harder than a win. Otherwise, there would be no reason for this anomaly. Human beings postpone making decisions that will cause pain. It is the reason why we let losing trades run. We want the instant gratification, but we want to delay the pain. Hope dies last. As long as the losing position is open, there is hope. So that's a fantastic line. We want the instant gratification, but we want to delay the pain. That's a fantastic line that could relate to literally everything in life. That's why trading is phenomenal, because trading is just a reflection of life. The junkie and the CEO. I use an analogy to illustrate the concept I have just explained. It is akin to firing the CEO of a successful Fortune 500 company and betting your money on the junkie turning his life around. Crude, yes, the junkie might turn his life around, but I think the odds of the CEO continuing his successful run are higher than those of the junkie turning a corner for the better. That is why I'm arguing that trading is so much more than technical analysis. That is why I am arguing that we need to learn to handle losses a lot better than the general population does, because they handle them very poorly, and as a result, they are generally unable to make money from speculation. Control your mind, control your future. I feel like this is going to be a good one. I'm not a masochist. Hopefully I'm saying that right. Nothing could be further from the truth. If I do tend to dwell on pain, it is more of a reflection of pain's role in the context of trading profitably. What I'm attempting to do is a difficult endeavor. I am trying to explain why 90% of all people fail in achieving their hopes and dreams when it comes to trading. When so many people commit the same mistakes over and over, there must be a deeper meaning that has yet to be uncovered. Naturally, I'm hoping that by now you will have a much greater understanding of what it is that is going wrong. My own motto is control your mind, control your future. Doing so requires vigilance. You have to own your life. If you don't own it, you are not the boss. You have to take full responsibility for everything that you do. You must be the master of your own kingdom. You can't walk through life with your eyes half shut. You have to walk through life with your eyes fully open. You have to know what you're getting into. Be prepared. You have to take possession of your life. This is a thought process you have to constantly reaffirm. Our minds tend to drift. There are so many distractions in life, so much superficial noise that doesn't bring substance, but that our brains are attracted to nonetheless. The brain would rather look at Facebook and YouTube than sit in quiet contemplation. The driftier brain needs to be controlled through daily vigilance, whether it be through a mantra or meditation, or whatever you decide suits you best. As a famous doctor once said, when you ask what exercise is best for humans, it's the one you do. It doesn't matter whether you meditate or write a diary or do whatever other practice you choose to center yourself, so long as you do it. There needs to be a regular time in your day where you remind yourself of your purpose, of who you are. The world is full of temptations that distort a healthy self-image. The temptations take us away from who we are by telling us that who we are is not enough. But you are enough. Being a good trader really has little to do with tools and charts. It has a lot to do with fighting our humanness. If you really want to trade the markets using leverage, engaging in high-octane speculation, you have to learn to desensitize your normal emotional response mechanism to fear, greed, and other delightful human reactions. You have to fight your humanness. That was really good. Right. Disgust. Many years ago, when I was just a young man, I had a girlfriend. She was my first real girlfriend, and I was her first real boyfriend. We were young, and we were very much in love. My girlfriend was a little round bodily, which I found very attractive. She, however, did not like her body image, so she began to diet. She had dieted before, but had always failed to sustain a weight loss plan. Now she was in love, and her motivation shifted into another gear. The weight loss became quite dramatic, and it led me and her family down a path that pains me to write about. So, as he's talking about this, I'll speak on my own personal situation with the markets. So, one thing I love about this book is that it tells you how much you really need to understand yourself. And in order to be truly successful in the markets, you have to be successful in just liking yourself. Because if you don't like yourself, you're probably just going to succumb to so much negativity that the market and social media as well throws at you, right? You won't have a good enough shield to defend, right? You're just going to berate yourself. So when I started in 2019, 2020, I was extremely overweight and something I dealt with my entire life. But I knew that from a mental perspective, if I really wanted to be successful in the markets, I had to get rid of the weight essentially, because then I would truly like myself, I would truly love myself, and that's part of the mental game is significance, right? So from then until now, I lost about 100 pounds. I'm sure you guys know this story. Literally, the market forced me to be better. And that's what the market will do. The market will force you to be better, or you will perish. It's quite simple, right? Or you just run out of money. A lot of people just run out of money before they can be better. So always focus on risk management, position sizing, the key basic fundamentals of trading, or else you're just going to get kicked off the train before it reaches your destination. That's the worst, right? Let's keep going. Anorexia is a serious psychiatric disorder, but, and forgive me for using a tragic story to illustrate a point about behavioral change, it is an interesting motivational phenomenon. We are hardwired to eat. We need no training to eat. Yet somehow this hardwired pattern is overridden by a social motivation, the desire not to be overweight. This force, this motivation is so strong, it patients with an eating disorder that it proves to be impervious to both medical and psychological treatments. What is the basis for this powerful motivation? It isn't chanting, it isn't positive self-talk. As I understand it, my girlfriend was motivated by love, but more importantly by disgust. She was disgusted by anything that looked and felt fat and overweight. This force was so strong it could disrupt her hardwired pattern of eating food. So for me, my number one motivation was just mental fortitude, discipline, and really just trying to be better. I think that's the mindset I needed to adopt to be a good trader. As humans, we are driven forward by forces. Those forces can be born out of a desire to move away from something, or they can be born out of a desire to move towards something. I happen to be a person who is primarily motivated to move away from something. I grew up in a wealthy part of Denmark, and I attended a school for the well-to-do. Then my parents divorced, and I went from living in a big house with an enormous garden to living in a one-bedroom flat where my father would sleep on a pull-out sofa bed in the living room. I was a young boy at a time when all my school friends wore Levi's denims and Lacoste shirts. There was no money for that in my life, and it created a sense of inferiority in me. As soon as I was old enough, I started taking after-school jobs in order to earn money. What did I spend it on? You guessed it, brand clothes. I also became a prolific hoarder of money, a saver if you like it. I took great pride in depositing my wage checks in the bank and seeing my account balance grow. I moved away from poverty. In my belief system and in my experience, a way-oriented goal setting is much stronger motivational force than towards-oriented. But I accept that this is an individual preference. You can test for yourself where your preference lies using a simplistic scenario. What would compel you to lose weight more? A picture of you in perfect shape or a picture of you where you are obese? That's a great question. I asked my circle of friends what they would prefer, and all agreed that they would find those obese pictures a stronger motivator than the perfect picture. although a few did comment that they would probably still like to have both. Fair point. So for me, I'd probably choose the perfect, because always focus on the end goal, I guess. I believe that disgust is a much stronger emotion than joy or happiness. We all have reasons to be happy every day, but we tend to forget that. However, disgust is not something we are likely to forget. You won't forget the rotten milk you drank by mistake, nor will you forget the client of yours who had such repugnant breath that you nearly threw up. Ed Sekoda once said that everybody gets what they want from the markets. When I read that, I dismissed it. I wanted to win, but I wasn't winning, so I clearly wasn't getting what I wanted. End of story. It annoyed me that he said that. The thoughts of never being able to trade profitably consumed me. I had spent so much time studying, researching, testing, formulating plans, calculating ratios, that I really didn't know what more I could do. If you look around in your life, you are likely to be able to find examples of dramatic changes induced by disgust. What gets a person to finally commit to a goal is reaching the point of disgust. I got disgusted with my trading over a long period of time. The pattern was always the same. 1. Trade like a wizard. 2. Become overconfident. 3. Blow up the accounts. I became so sick of it. Positive intentions, sticky notes with mantras on my trading monitor, and self-help exercises don't possess nearly the motivational force of physical disgust with oneself. If disgust can turn eating into a behavior to be avoided, and if disgust can turn an alcoholics drinking into a thing of the past, then disgust can also turn you into the trader you would be proud of looking at in the mirror. That's absolutely phenomenal section here. I'm sorry if I have shocked you. Those of you who know me well will probably be taken back by my extreme steps to ensure my pattern of behavior in the trading arena is exemplary. I'm not going back to the roller coaster ride I was on in my early trading days. I was so disgusted with the amount of money I lost, it was embarrassing. We are most apt to change a pattern once we become truly disgusted by it. Would you continue to do business with someone who violated your trust and stole money from you? No, you'd become so disgusted with such a dishonest character that you would cut all ties with them. So I find this kind of ironic because revenge trading is the number one source of failure in retail trading. But revenge trading, I'm sure we've all done it, is the number one thing that makes you most disappointed and disgusted with yourself, right? So when you do revenge trade, you got to look at it from a place of experience. That's the only way we can be better, by learning through mistakes. But I really 100% agree with this book when they talk about disgust, because that's insane motivation. Yeah, I mean, I feel like you can't really argue that. Well, that person is you when when your own patterns violate your contract with yourself and cause you to lose money consistently. Once you become truly disgusted with your own patterns, you'll shun them altogether. A trader is losing and continues to lose because he doesn't want to change. Change is hard work. I began plotting my trades on the chart when the day was over. I put a marker where my entry was and where my exit was. It was horrible. It was like incriminating yourself over and over. I was disgusted with my recklessness. I had to face up to the fact that I was actually an awful trader. I was like the guy who could recite the entire technical analysis syllabus for the master technician exam, but I could not stop myself from 1. Overtrading out of boredom, 2. Overtrading out of anger and a desire to get revenge, 3. Impatient trading, jumping the gun, 4. Trading against the trend, trying to catch the low of the day, 5. Fearful trading, by cutting my own winners short out of the fear of profit would disappear, 6. Constantly averaging in lower and lower, i.e. adding to losing trades. Perfect. This next section, we'll finish this next section and wrap it up. Alcohol. When you are a successful trader, you make good money. My friend and trader mentor Larry Passavento instilled in me the passion for passing on, before passing on. The no, instilled in me the passion for passing on. Larry himself is an inspiring trader, but his passion for helping others is equally admirable. One project I support is to help people dealing with alcohol issues. I do so by offering anyone who sincerely desires to quit drinking a book that helped me truly understand the nature of the addiction trap. Addiction trap, excuse me. I developed a drinking problem in the aftermath of a painful breakup. I drank to forget. I was in love. I was a fool. She left me. I started drinking. The problem was that I didn't seem to be able to stop myself from drinking. This carried on for many months. I could not stop myself from drinking, so I sought out help. I remember vividly standing up at an Alcoholics Anonymous AA meeting saying, "My name is Tom Hugard. I am an alcoholic." It was horrible, but at the same time, it was relieving. I felt like a fraud. I felt there was inconsistency in my life. I was outwardly a success. I had 2 cars. One was a luxury SUV, and the other an Audi R8. I lived in a nice part of town overlooking the sea. What did I have to be unhappy about? Well, for one, I had no control over myself and my drinking. Standing in an AA meeting is like being stripped naked for the whole world to see. They see your fat ass, your tiny willy, your saggy boobs, your cellulite, your scars, your spots, your pimples, your swellings, your bald head, and whatever bodily imperfections you can imagine. It is absolutely everything you don't want, and you have a hall full of eyes watching you. But by the end of the exercise, you realize the truth. You break yourself down so that you can survive, so that you can be reborn as the person that you really want to be. A fresh start. Vanity thrown on the rubbish pile. Clean canvas. Here I am. This is me. The walls are ready to be decorated however you want. Exactly the same model is used to train elite soldiers. They are pushed beyond their breaking point. Then they are put back together again, stronger, wiser, and with an unshakable faith in their own strength, their own abilities, and their determination to get a job done, no matter what. No one in their right mind enjoys exposing themselves like this. It is why we get defensive. It is why we fight our corner. Our identity is being questioned. Call it ego, call it identity, call it what you want, but no one likes having their intelligence questioned. It is a lot less painful to continue down the known path than to stop, evaluate, and turn around. There is only a slight nagging pain when you choose to continue down the known path, and you can soothe your inner pain by reminding yourself that you are not alone. There is power in numbers, even when everyone is wrong. But you soon find yourself being disgusted by your own lack of progress, your own inability to stop the behavior that is troubling you. Attending AA meetings was rock bottom for me. I evaluated, I got honest with myself. The pain was relentless because everything was new, and I felt naked, very alone, and exposed. And yet, that is power. There is power in being honest. There is power in standing up and saying to the world and yourself, this is who I am, and I don't like it. In fact, I hate it. I am embarrassed by it, but it is what it is. It is a clean slate. It is a fresh start. It is like a forest fire. It clears the debris. New growth can start. I have not touched alcohol for 6 years, and I know I never will. It wasn't the AA that finally helped me. It was healthy living advocate Jason Vale. I have never met the man, but I want to thank him for setting my life on a good path. I am certain that no one has bought more copies of his book about alcohol dependency than I have. I send them to people all over the world. Jason describes better than anyone the trap of alcohol. Reading his book helped me understand the nature of addiction on an entirely different level, and I found it easy to stop drinking from day one. You may ask what this has to do with trading. Rightly so. The answer is simple. If you have some trading experience and it is not turning out to be how you want it to be, you have a choice. You can carry on thinking that things will change. I can tell you they won't, but you will probably not listen to me. Or you can take my advice. You did, after all, make it all the way to this section of the book, so maybe there is room for improvements. You can strip yourself naked, metaphorically speaking, and get honest with yourself. You can stop trading and start reviewing. You can begin to understand what it is you are consistently doing that causes you to not make money trading. Take yourself apart, clean up the process. Take on board my guidance for the mental side of trading. Put yourself back together again, fund a small account, and start with an entirely fresh mindset approach. All right, so we're wrapping up right there. 171. I think that is my favorite section of the book so far, and we have a little bit less than 100 pages to go. Let's jot it down here. I think that section of the book is the most important section, but we'll see what else is written. He's basically saying that you have to look at yourself in the mirror and you have to be honest with yourself. If you are making mistakes, write down those mistakes, figure out a solution. If you have a problem, figure out a solution. That problem will never be fixed by anybody else in this world besides you. You have to figure out what the problem is and fix it. And the best example that I can provide based on my own situation was I found it very difficult to actually understand where I wanted to trade on the chart. I kept going back and forth between higher time frame, smaller time frame, intermediate, etc., bigger picture. I actually didn't really have much of a clue what I was doing from the perspective of time frames. And as you guys know, time frames are very important to trading, such that I took losers when I knew that I probably shouldn't have. Even though those losers were completely fine, it was not something that I wanted to do. And I would probably only take those trades out of FOMO or out of, I just want to get 1 or 2 R and call it a day. That's fine if you want to do that. But for me, I knew I didn't want to do that. So I spent a good amount of time back on this week right here, September 20th, 21st, 22nd, into the weekend, into the end of August, figuring out why I missed this dip right here on August 20th. I said to myself that up here, I was taking trades up here, right? If you guys remember even the live stream on the 18th of on Monday the 18th, I was taking trades up here. They were fine trades, but I knew in the back of my mind that there's better trades below that I want to take instead, right? So based on my personality, I can wait for these opportunities to come, but am I going to still take the low quality trades because of FOMO and greed? The answer back then was yes. And I was taking these trades. Now, after review and after a lot of honesty, after a lot of self-reflection, understanding what time frame actually works for me as a human and my personality, I came to the conclusion that what I want to do is only the higher time frame, high quality levels, right? That we talk about here, we talk about my trade plan, etc. So when I'm actually trading the markets, it's like that. I know exactly what I want to do. Every level is defined. My brain is turned off. There's no FOMO. There's no greed. I could care less what price action is at right now. I only care about price action when it comes to my level, right? And I don't get frazzled when it does. All of the review and refinement work that it did from August 20th through the 25th into September resulted in the September 2nd buy. And that, to me, is probably the best trade of my career so far. Not necessarily from a P&L perspective. I think just from the work and the review that I put in to make sure that I could catch these trades. Because these are the trades that I want to take for the rest of my career. These trades will always present themselves, period. Always. Doesn't matter, bear market, bull market. These dips will always be represented on the chart because somebody has to get trapped. Other than that, enjoy the rest of your day, guys. I will be heading out. The stream record